I'm your host, Henri Arslanian, and welcome to the Future of Money podcast. My goal with this podcast is very simple. It is to go deep in some of the biggest ideas, trends, and developments we are seeing in the field of crypto, and hopefully empower you with this information and then let you make your own decision on what their impact can be on the future of money and finance. To do this, I invite each week one of the leading figures of the global crypto community to have a one-on-one conversation amongst crypto aficionados and discuss some of these topics. My guest today is James Quinn, the managing partner at Q9 Capital. Q9 is a full-service digital asset platform for private wealth, family offices, and corporates delivering spot, OTC trading, custody, earn, leverage trading, all through a single point of access. One thing, by the way, you may not know about James is that he started his career in finance as an exchange floor trader. James, great to have you today with us on the Future of Money podcast.
Thanks, Henry. Great to be here.
James, maybe for the benefit of our listeners today on the podcast, can you share a bit the background of what is Q9?
Yeah.
What do you guys do from that perspective?
So, as you mentioned, Q9's full service digital asset platform. We're focused on private wealth. For private wealth, for us, it's individual private wealth, it's family offices, it's corporates, right? And we deliver a full product suite to them. So everything is completely digital from the ground up. So you can onboard, trade, custody, everything's available digitally, but everybody gets a relationship manager. So it's an additional piece that I think for our clients in particular, they found really intriguing. And, that's helped us kind of make our footprint in this space.
So the relationship management, which is kind of the traditional model of finance, but actually that level of service, the high touch,
that's right.
I guess is what sets you guys apart in many ways.
Right.
And James, obviously I mentioned in the intro that you start on the floor, literally the good old school way of trading.
That's right.
Can you share about your background, how actually, what were you doing before and how you entered the crypto space?
Actually, I started off as a floor trader, and it's just like it is in the movies. It was a pretty crazy place at the time, a little bit immature. We used to have a saying, if you liked high school, you'll love the floor. But I learned to trade there. I worked for proprietary trading firms. Eventually, my business took me to Brazil, and then it took me to Hong Kong and Tokyo, and I moved into banking. So, for around the last 10 years, immediately before I got into crypto, I was working for the investment banks and the flow side and managing risk there. And then I moved into crypto in 2017. So I'm not an early investor. I didn't buy any Bitcoin in 2012, unfortunately. But I was pretty excited about the opportunity to build in the space because what I saw actually reminded me of my early days when derivatives were kind of being built up in the early 2000s. And I thought, okay, this is kind of happening again. And that was really exciting. And I wanted to be a part of it.
So it's interesting, really, in the early 2000s, I think something often a lot of people forget is when it comes to derivatives or even emerging markets, they used to be very... definitely not a mainstream instrument for a long time.
Oh,
right?
Totally. Yeah. I mean, it really took a long time, I think, for a lot of the firms to get their head around how they're going to offer these. And now it's easy access for derivatives, particularly for private wealth. But now what we're trying to do is deliver that same type of thing in crypto, right? And get that mainstream, right? And so we're playing our little part with our particular niche.
So actually, let's talk about that. Obviously, one thing I want to discuss today is really the intersection between private wealth management, obviously, and crypto.
Yeah.
From your perspective right now, let's start first from a demand side, from the client side.
Yeah.
What are the type of clients? What are the type of demand you guys are seeing from high net worth clients, from ultra high net worth clients, from family offices when it comes to crypto?
Right. Our clients are generally new to crypto. We like to say they're the Bitcoin class of 2021.
Okay.
So they're pretty sophisticated in whatever they're doing and their, the other parts of their life, the business they're running, whatever their investments are. But they're a little bit new to crypto. So usually what they're demanding is access to buying spot or getting kind of access to Bitcoin or to ETH, right? But, custody and a safe solution and somebody to walk them through the process if they have any questions.
So you think actually for a lot of these clients, when they're coming in, to walk them through the process is something that is quite important. Like you're not going to go just log into a platform and start trading.
Yeah, I mean, they're used to, one thing that they do like about their current private wealth is the relationship part, right? So their current private wealth relationships might not be offering them crypto or digital assets at the moment. So they want to invest in this new asset class. And they're actually quite innovative. Even though they might be new to crypto, they're not afraid to take risks. They're not afraid to try new things. I think that's a little bit of a misnomer that, private wealth is always conservative. Our clients, there's a time and place where they want to try new things and they want to get into crypto. So probably, certainly six months ago or maybe a year ago, it was a bit more about education.
Mm-hmm.
Now they kind of come to us more like, hey, I want to get involved. How do I do it? Right. So it sort of helps because obviously it's in the ether now and you see it everywhere.
So actually, you mentioned, that a lot of this misconception that a lot of private banks are conservative. If they're not conservative, why do you think it's still taking a lot of time for traditional private banks and wealth managers to enter the crypto space?
Well, I think that the clients aren't necessarily that conservative. The private banks are still fairly conservative for lots of reasons that I think make sense. And there's a lot of tradition there. And listen, I mean, one of the reasons we're doing this blockchain cryptocurrency is the entire back end is just different, right? That's a digital bearer asset. I send you Bitcoin, it's yours, right? And so you have to have an entire setup that's different. And so this is an issue for all traditional finance firms, from investment banks to asset managers to private banks. They have to figure out how to integrate that into their legacy systems, if you will. So they need to move a little bit slowly. And I think regulatory clarity as it sort of develops over time will help them. But it doesn't mean their clients don't want to do it now, right? And so, we get calls all the time from both, our clients, our future clients, but also other wealth managers, private bankers, like, hey, my clients are asking me about digital assets. They're asking me about crypto. Can we do something together? How do we service them?
That's interesting. Actually, and what is the... So, like, for example, the message you guys give to a lot of these like IFAs or these client advisors or wealth managers, when they're coming, what are the type of questions they're asking?
I think they're asking, a couple of questions. One is just simply how it works. Is it a lot different than? Not really. When you sign up for Q9, the process feels very similar to signing up for a traditional broker, right? You sign up, you can send fiat, you can receive fiat, you can custody your assets, but you don't have to do anything to custody them. You buy Bitcoin, it goes into your account. One account has everything. It has spot trading, it has borrow and lending, it has different custody choices and features around it. So in fact, it's not that complicated, but they want to understand a little bit about security. So we've spent a lot of time with security and, having the best custody solutions available for them and our internal processes and procedures around that. So we can talk them through, why it's secure. And then I think sometimes they just want to understand a little bit more how crypto and blockchain actually works. So, like I said, I think it's actually changed quite a bit in the last 6 months. They come more educated now because it's so out there and they're really driven to know more about it even before they knock on our door.
But what do you think really drove this surge of education? Is it because it became the price rise and it went in the media? Or it was just people in the mainstream media was talking about it? What do you think is the main driver of crypto awareness and education
Well,
today?
I mean, to be honest, I think it's both, right? The mainstream media, the price rose, the mainstream media covered it, the price rose further, and it's all over CNBC, it's all over Bloomberg now, right? I mean, both you and I can remember a time where we would go, oh, wait, they just talked about Bitcoin, right? But that's not a big deal. They do it every single day now. It's just another asset class to talk about, right? So clearly the price action helped, pique people's interest or make them move a little bit faster. Nobody's saying, none of the firms that we're talking to, and certainly none of our potential clients are saying, this is going to go away, or I'm just going to ignore that. There's somewhere in between. We're ready to try something now. Just tell us how we're going to do it, or we're monitoring it. We're trying to get our internal processes in place to be ready for it.
It's really interesting. And so, I mean, I presume you're very bullish on the growth of the wealth management sector when it comes to crypto.
Yeah. I mean, we're bullish on wealth management growth. We're bullish on crypto growth. We happen to be based here in Asia. We're bullish on growth of, in the financial markets in Asia. So for us, that's all three check boxes. And, we're kind of placed, we think, in the right time and place. But in particular, in the growth in crypto, we're really, really excited about it. Private wealth isn't really directly served, right? Nobody's, outside of Q9 is really saying, hey, we're here for private wealth. When we designed the platform, we designed it with our clients in mind. We didn't build the products and think, oh, well, we'll take this type of client and we'll take this type of client. Frankly, I think the retail offerings in crypto are pretty great, right? So there is a space for those types of clients, like on exchanges, et cetera. But we're offering something a little bit different, a little bit unique. And I think relationship management is something overlooked in fintech in general, not just in crypto.
You mean the human relationship?
The human element. It doesn't mean that we're not digital. Like I mentioned before, we've designed the digital side from the beginning. It's a completely 21st century program. So there's nothing, in terms of legacy that you're thinking about with your old relationships. But we wanted to keep the human element.
That's very interesting from that perspective. Actually, when we talk about, let's say, James, about the entry of high net worth individuals, ultra high net worth individuals, family offices, moving forward, obviously, I think a lot of them are just buying Bitcoin right now. They're buying spot.
Yeah.
What are the type of products you think we'll see them buy? Will there be a lot of structured products?
Yeah.
Will there be funds?
Yeah.
Where do you see a big growth over the next couple of years in the crypto space?
I think first, we expect them to trade and invest the similar way to that they're doing traditional assets, let's say in equities in crypto, right? So they're going to directly trade, they're going to buy spot, they're going to buy and sell, they're going to trade around it, right? And they're already doing that with our platform. They're definitely going to be interested in structured products, particularly in Asia. Structured products is a massive marketplace for Asian private wealth. And so we're planning on offering that. And we think that is one of the biggest growth areas in crypto in general, but in particular for private wealth. So we're pretty convinced they're going to do that. And there's, of course, fund offerings. It kind of breaks down a little bit regionally. In the Americas, to some degree in Europe, it tends to be, the private wealth market tends to be a little bit more fund focused. In Asia, it tends to be a little bit more direct, a little bit more hands-on. We're seeing the same thing, basically. So we expect it to go that way. But then I think there's going to be native offerings. Our clients already ask us about DeFi. When we first launched, we said, okay, Bitcoin, Ethereum, the majors, and that is mostly where our clients live. But you would be surprised. We were certainly surprised at how quickly the client says, oh, well, I've never invested in digital assets before in crypto. Let me buy some Bitcoin. And then weeks later asking us like, hey, what's Sushi Swap or what's Uni or how does this work? Right? And we think actually what's happening in the development, let's call it the native crypto marketplace like in DeFi is really exciting. And we want to offer that as well. We're not just trying to be a mirror with a different asset class, exactly what private wealth is. So we're growing the entire platform to serve our target market.
So when you think about structured products, like what are the types of structured products you think we'll see a lot in crypto?
I think you're going to see a lot of enhanced yield products, crypto-linked notes, if you will. Right. It gives the clients an enhanced yield. They're very simple products to understand on a relative basis. And one thing that's nice is since the space is relatively new, they are simple. The platforms haven't had to move out the complication curve in order to make things more interesting for clients yet. And I think that's good for clients as well. We want to offer them simple things with great yields. Because of the volatility in crypto and digital assets, they do really have some interesting yields that our clients actually want to look at.
But on that front, I mean, if this let's say private bank starts offering structured products to clients, and there's a couple of considerations that pop to mind. One of them is risk management. I mean, do you believe today a traditional wealth manager understands crypto enough to, not only to sell it to clients, but more importantly, to be able to do proper risk management in the back end, especially on structured products?
I can't really speak for, any particular wealth managers or what they're doing. Many of them don't actually manage their own risk. They're plugging into investment banks or different other types of platforms where they're buying those. But I can't speak for all of them. But those aren't offered yet. You can't just plug into crypto structured products. And plus, you don't know exactly who's on the other end of it that you're offering your clients, right? There aren't banks with 100 years of history into the space. So you want to go with somebody on your platform that you trust. Now, I do think it's important that while we're developing this in crypto, and I mean this for, not just Q9, but the entire space, that people are really thinking about that and thinking forward in terms of risk management. It's both a tech, build out crypto and digital assets, but it's also a risk one, right? These are financial products. When you're talking about cryptocurrencies, people are the biggest use case is trading them. So I think this has to be integral to the DNA of your firm if you're planning on offering this in the future.
Because would you think that actually doing risk management in crypto is more complicated than risk management with traditional assets?
I think that certain traditional assets are very advanced out the complication curve. So in terms of the derivatives, they can be very complicated and the margins are very slim. And so people are solving for basis points. But these are known things that have been studied over time. In crypto, there's so much innovation. And so there's kind of thinking about the unknown unknowns. And so I think risk management, like I said, I think it really needs to be the DNA in the firm, and that's really important.
Yeah, I mean, because you're right. I mean, especially with the crypto volatility, and it's not you need to really understand some of the products as well, especially if you're offering structured products on the back end.
Yeah,
right?
But I mean, think about like the sell-off we had, recently in May.
Yeah.
nothing shut down. Nothing really happened. I mean, it showed really a certain robustness to how the marketplace in general is handling it.
So actually, on that perspective, right? Obviously, you were trading in traditional assets for many, many years.
Yeah.
When it came to the crypto space, what was the one thing that surprised you the most that is different from trading traditional assets?
Well, I think that, I don't know if it surprised me, but already the technological, everybody was thinking technology. Everybody was thinking how to do things on an automated basis. There were very few people trying to build something that, was, exact model of what they saw in the past, right? So, and I think then, but you mix that with a lot of people who hadn't seen markets. So you had sort of kind of a lot of newer traders or risk managers, some who survived and have done very well and have built up fantastic businesses, and others that haven't. And that makes sense because, it was really the other marketplace, the other thing for most of its history. Now, I mean, we clearly see the trend. These things are blending together and they're sort of becoming one. Crypto is becoming closer and closer to traditional markets, and traditional markets are more and more embracing crypto and in different ways, depending on the platform.
And it happened quite quickly as well, which is quite interesting as well.
It feels quickly right now, but honestly, if you're talking about it probably in 17, 18, you're like, when is this going to happen, right? And we used to talk to, I should say that recently when we've talked to some, let's say private wealth managers or other people in this space, they're like, oh man, this kind of ramped up so quickly and it exploded. And the price did explode, obviously, in the last 6 months, even after the sell-off, when you consider that, how much it's. But if you're a crypto person, you saw that stuff being built. You saw even in the crypto winter, things continue to be built. So even though, it seemed like forever, it was kind of like, okay, when is this? Things continue to be built. They continue to be built now. So when it finally happened, you were like, okay, here it is. You didn't really think it came out of it, nowhere, right? From that standpoint.
So what is actually, talking about being built, obviously you spend quite a lot of time building the current platform with the Q9.
Mm-hmm.
What is the most difficult thing in building a crypto platform? If you had to give one piece of advice to our listeners today who are looking at building crypto platforms, what is the biggest challenge that you face?
I think focus, right? Like you want to think, you want to plan far enough in advance, but the space innovates so quickly. So you really want to think about the next products getting out or the next things and the next piece of growth in terms of client acquisition, right? So it's so easy to be distracted by so many different things. Every day there's regulation, there's marketing, there's product, there's risk, right? There's technology. What does the front end look like? What does the back end look like? It's really easy to be distracted. So if you can kind of focus on what's the next goal right here, how do we get this out? And I think like any fintech, and this is probably not specific to crypto, you really want to be innovative and have some speed, but you want to do things right. And getting that balance is always a little bit of a challenge, but it's probably what makes it exciting, I think.
No, absolutely. With the speed of change we're seeing crypto, yeah. I mean, it's quite amazing actually from that perspective. Also the fact that it's 24/7 makes a hell of a difference from that perspective. I also want to ask, when you're talking about obviously the space is moving very quickly, one space that has moved very quickly in the last probably 18 months was really the rise of decentralized finance, or DeFi for short. Mm-hmm. How do you look at DeFi? Obviously, you mentioned before some of your clients were asking for exposure to some of the DeFi coins that we're seeing in the market, a lot of the government's tokens and so like. But do you think from, we're also seeing the rise of kind of wealth management, asset management type like products in DeFi. Yeah. How do you see the evolution of that?
I think DeFi is just replacing with code what was done by humans or by, kind of one-off, like, in each step. So in some ways, when you look at DeFi, it looks completely different. But in reality, you're sort of transacting in the same way, but those things are codified in, which makes, you and I able to do certain things directly that maybe it would take a middleman to figure out how to get from A to B, historically. So, in terms of what's happening in asset management or wealth management in particular, I don't see this as different than how DeFi is developing. I think, when you're talking about, what assets like, a manager could trade or how different things are exchanged, it's just going to be in the code. It's just going to be in the smart contract at various given levels, just like the rest of the DeFi.
So actually when we look at the evolution of these assets, a lot of products are being offered, right? So DeFi, you mentioned, there's a lot of interest. The other thing that's been a lot of people are watching is the rise of ETFs.
Yeah.
Like obviously we have some approvals now in Canada, but if and when it'll be approved in the US, for example.
Yeah.
Do you believe when ETFs become easily available, you'll see kind of a shift where a lot of the high net worth individuals may simply go buy the ETF rather than coming and buying direct spot Bitcoin from platforms like yourselves and many others?
They might to some extent. I mean, obviously it's easier if you already have a particular relationship. I think when you're just buying Bitcoin or just buying a single product, ETFs aren't necessarily the most efficient. The reason you're doing it is because it's on your current platform. But in fact, what we're seeing as well is that, like I said, traditional finance, they're starting to try to figure out ways to offer spot, right? And crypto firms are finding out ways to offer other things or ways for their clients to have a similar experience, the good parts of what they've had in traditional finance. So I don't necessarily I see it like it will definitely help growth in the short term, but I'm not sure that is the way or the main way over the medium term that people will necessarily be investing in crypto. I mean, it is a digital bearer asset, and having that entire backend, the blockchain backend for all these different settlements is sort of the purpose of this whole thing and what makes it unique and what makes the cost drop in terms of settlement, right? So, ETFs, right now they're kind of a pasting over the current system, which I think is a great way to get access. Yeah. Now, when you're talking about ETFs that offer something a bit more complicated, a strategy, a basket, et cetera, maybe that's a little bit different, right? But I'm sure there's going to be smart contract ways or other, let's say crypto native ways of offering those things as well.
But on the point of offering it, it's been quite interesting to see the reaction of a lot of private banks to crypto. Yeah. I think while we had some private banks embracing crypto, many of them have been quite negative, very openly. I was just reading a report from UBS actually as we're filming this, basically where they're very negative again on crypto. Yeah. Why do you think a lot of private banks or wealth managers and wealth management firms have been so negative on crypto? And what do you think will be the catalyst to potentially change this, if it changes ever?
Well, I think the catalyst is their clients. That's the catalyst that, the client says they want to do that. You can only be so negative so long. They're going to go away. They're going to find somebody else to do it if you won't offer it to them. And that's already what's happening, right? I mean, some of our clients, if it was super easy to invest in digital assets or crypto where they currently are, they might not come to us. Yeah, we have a much more native experience. We're actually specializing in it. So there's lots of other reasons that they might come to Q9. But obviously, if your current broker can't do it at all, you're going to start looking around, right? So I think that's really going to be, who can say why they're negative? I mean, a lot of these firms have been in existence for a very long time. And I honestly empathize with, you don't want to be interested in something that's Johnny come lately. And you want really something that's going to last for the long haul. This is kind of, you might have generational relationships, within your firm. But I think crypto, we're long past that, right? I think blockchain, it is long past that. And, it's really only been around for a little over 10 years. But the innovation in the space, like just simply saying, oh, this isn't interesting, it's just not really working anymore.
Before we move on to the next 5-round round, just one more question as well. Is basically, what are the catalysts, right? Today, one, you guys see an increase of demand, increased activity from these family offices, from these high net worth individuals. Yeah. What is generally a catalyst? It's in the news? Is it price increase? Is it regulatory development? Yeah. What is driving a lot of activity?
It's for the individual clients, it's news and price, right? Because they have, kind of a lower friction of their investment committee. Since they're a kind of an investment committee of one, right? They can go in and decide to, all right, I want to do this. It makes sense. I'll make a choice. This is a good relationship. This is a good platform. I'm going to go for it. They definitely will look at regulation. They'll look at licensing. Family offices, I think it's a combination. They're still, they want to make an allocation. They're there to make money. They're there to preserve assets, whatever they need to do, just like everybody else. But they may have a little bit of a higher hurdle, right? In terms of, so they're going to look at how regulation is developing over space, in time and place. And I think that's actually going to help, as we get more regulatory clarity, the current wealth managers, traditional wealth managers actually, move over to the space as well. I mean, it's not rocket science.
The topic of regulatory clarity is one that comes up a lot from when you see IFAs or client advisors raise issues.
It depends. They definitely ask questions. I think it's important to think about. I think it's really, though, about safety and security. Regulation is a proxy, like a way people can check a box and go, okay, we think we have a certain level of safety and security. And honestly, that's sort of the point of regulation, right? So it makes sense. But really, when you dig down, they're like, who are you? Where are you putting my coins? How does this work? How can I understand it? What happens if something goes wrong, right? And that's kind of what we're here for, right? You have us on speed dial. Like, you can call us and ask us. That's part of the deal. What we actually find out, though, is after they get through this and they onboard, 99% of what they do is electronic, right? That, once they're comfortable, if they have a question, boom, they still have us on speed dial. They can call, have us on chat, whatever. So once they get comfortable, but I think it's important for them to feel comfortable with the firm. We don't want them to have to, and they don't want to have to make many decisions, right? Well, it's hard enough to decide what to buy in crypto, how to invest, how to understand it. Yep. You want to give them comfort in terms of the platform and not constantly be thinking about that as well.
Do you think, we know only a couple of months ago that the volumes of the crypto derivatives surpassed that of spot? What do you think of that? Obviously, do you think that the market's derivative will continue to grow and retail will grow?
I don't see any reason it's going to be different than traditional markets. I mean, it's phenomenal growth. Derivatives are much bigger than spot in most marketplaces. So we don't really see that being any different. Being having a client set that is traditionally interested in structured products and derivatives, and being a firm with a kind of a derivatives DNA, we're obviously we're looking forward to that.
Well, James, thank you very much. What we're going to do now, the bell is back, the good old back. So what I'm going to do is I'm going to ask you quick questions, like 1 or 2 word answers, and we'll take them. We'll take them from there. Hope you're ready.
Yep. Here we
go. So first question, James. What is the one course at university you wish you had taken that you didn't take?
Entrepreneurship.
Oh, here you go. Right, good one. Could have been quite useful. If you had to take a bet, is Satoshi a man or woman, and what country is he or she from?
A couple people. U.S.
You think it's a U.S. American? There you go. What is one book, any topic confounded, you would recommend anybody to read? Your favorite book of all time?
I don't know if it's my favorite book, but I always recommend it. It's Skin in the Game.
Skin in the Game. Here you go.
Yep.
Here you go. What is if you were today stuck on an island, what is the one thing you'd want to bring with you?
Google.
Google. What are you now working at QAnon? What do you do in your free time?
I just mostly hang out with my family. I basically don't have any free time. But I like to go outside, do things with the family, be pretty low key. Every other moment's pretty intense.
What was your favorite video game character?
That's a tough one. I don't know his name. Maybe it's Pitfall Harry. Do you remember the Pitfall game? I'm showing my age here, but that was a pretty great game. Activision.
I think the listeners remember that Pitfall. There you go.
Yeah.
What's your favorite YouTube channel or Netflix series?
I liked Queen's Gambit, which I watched recently on Netflix. That's quite good.
Queen's Gambit. Here you go. What is as a former trader? What is the one asset outside of Bitcoin, Ethereum that you quite like?
Oh well, I love any kind of volatility trade or derivatives trade.
So here you go. The volatility. Here you go. Okay. The next question. What is keeping you up at night?
Everything I have to do the next day.
And the last question, James, to finish it off the Future of Money podcast today. Your price prediction, Bitcoin, December 31st and 10 years from now.
That's tough. I don't like to make predictions. Even 6 months out doesn't feel like very long, but, I kind of feel like we'll probably go lower and then go higher, finishing higher than here. 10 years from now, multiples, 5x, 10x, bigger from where we are. The space is still very small. If we're around, it has to be bigger or it's not working at all.
Here we go. So very bullish views from there. James, thanks for being with us today.
Thanks a lot,
Thank you for coming on the Future of Money.
Thanks.
That was James Quinn from Q9 Capital. Make sure to click subscribe if you like this podcast. A new episode will be released every other week. You want to stay on top of the latest developments on crypto and the future of money? Make sure to follow me on LinkedIn and Twitter, especially for my weekly Crypto Capsule show where I summarize the global crypto developments you need to know in less than 60 seconds. Also, don't forget to subscribe on LinkedIn to my weekly newsletter called The Future of Money, where I share 3 big ideas on the future of money that you need to know each week. If you want to learn more about crypto, make sure to also check out my YouTube channel, where I have not only videos of previous interviews, but also lots of crypto educational videos. And the good news is that all of my video content is now also available in French, Arabic, and Mandarin Chinese on my various YouTube channels. Thank you for joining me today on this episode of the Future of Money podcast, and see you all next time.